there's a consolidation story happening. There's a change of ownership story happening, but I think we're going higher just because you just look at the math. There's just way more demand than issued supply of Bitcoin or, existing overall supply in the marketplace. So we still maintain our price target between 180 and 200,000 by year end.
Scaramucci leaves no doubt he's all in bullish, with Bitcoin near $115. Zero at the time of this interview. He reminded viewers it wasn't long ago we were debating $15,000. His firm, SkyBridge, hasn't budged. Their year-end target sits between $180,000 and $200,000, and in Scaramucci's view, that's the conservative call. If you're enjoying this breakdown, don't forget to like the video, subscribe to the channel, and turn on notifications so you never miss an update. You can also check out our other videos on cryptocurrencies and the digital asset space, and share your thoughts in the comments below. Every bit of engagement helps with the algorithm and goes a long way in supporting the channel's growth. Thanks for watching and enjoy the video.
Listen, I want the mama bear chair. I don't necessarily think a dovish chair is good, because if you get an overheating in inflation, you're going to disrupt all of the ways that we consume. We're going to disrupt the housing market, which you guys were just talking about. I would prefer mama bear. I think Bitcoin specifically is going to be fine in any scenario, but I like the mama bear Fed. So hopefully the president will pick the mama bear.
How are you thinking about Bitcoin right now? We're looking at the price tag right about $115,000. We've had conversations probably when Bitcoin was at $15,000. Right now, in your mind, what's the window? What's the base case, and how high can it go from here?
Listen, there's been pain and euphoria in the Bitcoin markets over the last 5 years. I think what's happening now is lots of consolidation and institutional adoption. So if you went to a conference like this 3 years ago, it was mostly retail investors and CEOs working in the layer one blockchain space. Today, it's lots more institutional investors. So that's finally starting to happen. If you look at the numbers on something like the BlackRock ETF, the IBIT ETF, you can see now, Andrew, there's lots of institutions coming in. So what's interesting is that some of the whales have been selling. So I know I've seen your interviews with Michael Novogratz and the 80,000 Bitcoins that sold last month. And so there's a consolidation story happening. There's a change of ownership story happening, but I think we're going higher just because you just look at the math. There's just way more demand than issued supply of Bitcoin or, existing overall supply in the marketplace. So we still maintain our price target between 180 and 200,000 by year end. And I think that's a cautious price target, by the way. I think there are people that are way above us, those levels. But I just think it's a function of buying and only 450 Bitcoins being made by the network per day.
How do you feel about buying Bitcoin directly these days versus folks buying ETFs versus folks buying, some of the products that Michael Saylor is selling, for example?
Well, listen, they're all linked to Bitcoin, IBIT being the purest link to Bitcoin. I think what Michael has done is absolutely extraordinary, as evidenced by all of the copycats that are out there. And again, not just copycats for Bitcoin, but for Ethereum, Solana, Avalanche, and others. And so it's different strokes for different folks. Michael, you're probably getting a little bit more of a kick to your Bitcoin exposure. IBIT, I think it's a pure play. And I would just point out that places like JP Morgan will actually lend on IBIT. And so it's a very secure asset that people trust. I own a lot of Bitcoin and hold it in storage, Andrew, for myself and for SkyBridge. And so there's different ways to approach it. I think the institutions will likely go into the ETFs. And of course, there's a lot of institutions that, quote unquote, can't own Bitcoin, that they end up owning Michael's stock or synthetics like that.
And where do you land right now in the stablecoin arena? We've had Mr. Allaire on recently from Circle. That's really the way people are playing that in the public market at this moment. But there's a whole bunch of new stablecoin companies coming into the public market. And I keep wondering sort of how that all shakes out longer term. That feels different to me than what's happening with either Bitcoin as a currency or Ethereum or whatnot.
Well, I mean, and also the state of Wyoming is announcing this morning
Yes.
their own stable coin, so you can add that to the mix as well. Congratulations to the state. I just think that that's generally good. I share Secretary Besson's view of this, that that's generally good for the U.S. dollar. It means, more treasuries, more short-term treasuries, demand for those securities. But I also think it's going to bring a wave of technological innovation. We, at our last conference in Bermuda, we did a drop of stable coins into people's phones where they could spend, I guess it was $100 at the different tourist shops on Front Street in Bermuda, and it worked beautifully. And I think you're going to get to the point where we're transacting using stable coins. It may bypass some of the credit card fees and some of the other ancillary third-party confirmation fees that we've charged historically in the marketplace. So I generally think it's very good. I think those companies will consolidate. And I think one of the discussions here at the Wyoming Blockchain Symposium is going to be about a central bank digital currency. And I stand with President Trump on that. I don't think we need that. I think it could be, from a libertarian perspective, too intrusive from a privacy matter. And I think the private companies are doing a great job in this area. And so I'd like to just stay in the private company realm, right, as it relates to dollar-based stablecoins.
The piece I can't figure out in this context on the stablecoins is, if everybody's playing in this, how much margin is there really, right? And therefore, in the stablecoin arena.
Well, remember, they're not allowed, because if you look at the last legislation, there's no yield on the stable coins, Andrew. So if you're converting dollars into a stable coin, there's going to be a spread there for those guys naturally. I don't think the competition is going to impact that unless we switch up that yield mechanism.
Scaramucci also flagged a big style shift away from quality growth and back toward pure growth and cyclicals. At first, it sounds contrarian, since pure growth has underperformed in recent years. But as he reminded viewers, past performance never guarantees the future. He sees seasonal strength lining up in restaurants, entertainment, tech, hardware, and retail sectors he believes could rip higher if the Fed pivots dovish this fall.
The price as of August 14th was $23.78, net asset value of $23.77, and total assets of $2.28 billion. Over the past week, Granny Shots was up 0.58% compared to a 2% rise for the S&P, meaning Granny Shots underperformed by 148 basis points. Year-to-date, Granny Shots is up 19.1% compared to a total return for the S&P of 10.8%, meaning Granny Shots is outperforming by 825 basis points. On August 14th, we executed our quarterly rebalance for Granny Shots. And again, we want to highlight some of the changes. First, let me cover the deletions. We removed Abbott Labs, FICO, Intuitive Surgical, Progressive Insurance, and PayPal. We added Broadcom, Expedia, Lam Research, Live Nation, Vistra, and Willis Towers Watson. So let's think about the performance of these additions and why we added them. Here you can see that none of these is more than 2 Granny Shots, meaning that they don't fall into more than 2 themes. And let me just walk you through each of these. Broadcom, as you can see, has been a strong performer. It really falls into our style tilt, and it's a company that is a global labor supplier. That's why it's a Granny Shot. Expedia is a very well-known company, one of the category leaders, and it falls into our style tilt and seasonality portfolio. Lam Research has been another leading important name in terms of AI, but it falls into our style tilt as well, and that's what makes it a Granny. Live Nation has been a millennial story and now has benefits from seasonality, and that's what makes it a Granny. Vistra Corp actually is a play on energy and cybersecurity and now has a benefit from style tilt, and that makes it a Granny. And Willis Towers Watson is a play on both a PMI recovery and easing financial conditions, which makes it a Granny. Now let me talk to you about style tilt. We kind of rebalance our views around style tilt every 3 months, and previously we were recommending quality growth and growth cyclicals. But our new recommendation is pure growth and growth cyclicals. So the change is from quality growth to pure growth. Now that's going to sound puzzling to you because, for instance, year to date, or really in the last month and last week, pure growth has been trailing. But again, past is not a predictor of future returns, and that's why we're being a little contrarian here. And as far as seasonality goes, these are the 8 groups that we think are seasonal leaders. Hotels, restaurants and leisure, consumer staples, household products, entertainment, software, tech hardware, textiles, and specialty retail. But of course, we should think about the fact that the Fed's dovish beginning in the fall. And in fact, of these, 7 out of the 8, we believe, are actually sensitive to a Fed turning more dovish, the exception being consumer staples. Now let's look at Granny Shot's individual portfolio holdings over the past week. As you can see, these are the 5 removals. And the top 5 performers were Apple, which we've kind of said, don't give up on Apple because we know that they're not going to be missing out on AI. They've just been patient. Monster Beverage, AMD, KLA-Tencor, and American Express. Now, year to date, the 2 laggards have been Apple and American Express. The bottom 5 were Abbott Labs, Quanta, GE Vernova, Strategy, and Axon Enterprises. And of those, Abbott Labs has been removed. But it's been a good performer year to date.
To wrap up, Scaramucci delivers a masterclass in macro and tactical investing. From his Mama Bear-fed framework to a confident Bitcoin outlook, to his backing of stablecoins and ETFs, he's clearly playing the long game for investors. Navigating today's volatile, tech-driven markets, his roadmap is clear. Adapt or get left behind. Thanks for watching. If you found this valuable, the next video is even better. Click it now and let's keep going.